Hope all of you are having a fabulous holiday weekend. But on the other hand, I hope that lots of you actually watched the video. Since I dug deep today to get these stories, and they're really good ones. So I definitely hope we get a good response. I mean, like for instance, this morning, Brian Wang and we did a video. So far, it's like the worst video of the year in terms of response. Only 1,000 folks have watched it, and yet it's really quite fabulous as we talk about AI, being used as a way, as a method to judge stocks, as a way to check up on Tesla, for instance, in terms of how the street might be viewing Tesla, using amazing prompts. We talk about how that maybe isn't always going to be, well, at least not today, isn't as good as humans, certainly isn't as good as listening to this channel. And then Brian and I go through some of the things that we're missing and kind of explain those in a way that hopefully might be useful to you. Anyway, if you didn't see that, I'll put the card up on that later, but it is, a holiday weekend and I get it. But if you have some time, I would appreciate, and you probably would appreciate, going back and checking that out. All right, here you go. Number one, Grok. Waymo reported 464 collisions to NHTSA so far in 2025. 464 collisions. Over that same reporting time period, Waymo logged approximately 62 million driverless ride-sharing miles. James Stevens says, well, okay, bear in mind, these are not all the incidents. These are only the NHTSA reported collisions, which involving an airbag deployment or an injury requiring medical attention. So there could have been other fender benders that aren't even in the list. Waymo's not reporting every time a rider abandoned a trip because the vehicle got stuck part way and couldn't proceed, or incidents where a vehicle reversed through an intersection or traveled against the flow of traffic without a collision actually taking place. So Brad Ferguson takes that information. He says, look, Waymo is having one accident per 133,000 miles. That's good. That's decent. It's kind of like a human. If all goes according to plan, Tesla's self-driving V14 will exceed 1 million miles per accident, beating Waymo by a factor of 7.5x. Very few, he says, are ready for this information. Well, you just got it. You got it early. I don't see how anybody can deny it. I don't know how this can't be something that would be on the front page of of Wall Street Journal and all the rest, but it won't be. But there you go. There's that information arbitrage that you come to a channel like this to find out, and it gives you an advantage. Anyway, this comes from Today Tesla. Tesla, 2-day Tesla. What is it? I don't know. Okay. 3.3% experienced a sharp Tesla down. Here we go. I got it now. Okay. Tesla 3 was down 3.3% on Friday, experienced a sharp intraday decline, a trading volume of just 81 million, despite the absence of significant fundamental news. As a senior technical analyst, the goal is to uncover the underlying cause behind this unusual move by examining technical indicators, order flow, and related stock performance. So this is from A Invest. Technical signal analysis. We have a death cross confirmed. The KDJ indicator triggered a death cross today, a bearish signal typically associated with a short-term reversal from bullish to bearish momentum. This suggests a potential continuation of a downward trend or a pullback within an uptrend, which is exactly what Brian Wang said on Friday night. He says, yeah, he wouldn't be surprised to see the stock go all the way down to 320 and maybe even lower than that on its way back up to 1,000 or more by the end of the year. Failed bullish patterns will be number two. Classic reversal patterns like inverse head and shoulders, and double bottoms did not trigger, indicating no immediate support levels were tested or confirmed. So we're not able to burst through 350 to the 360 range, and so nothing was confirmed. RSI and MACO, I have no idea what those are, remain neutral. Neither would that be yeah, anyway, maybe MACD, not MACO, MACD, remained neutral. Neither RSI oversold levels nor MACD death crosses were triggered, implying the sell-off wasn't driven by exhaustion or panic selling, at least not yet. Well, what triggered Tesla's 3.5 intraday drop amidst high trading volume without significant fundamental news? Order flow breakdown. Unfortunately, no block trading or cash flow data was available to identify specific buy or sell clusters. However, the high trading volume, 81.15 million shares, and the 3.5 drop suggests it was a net outflow of liquidity, with larger sellers pushing prices lower. The absence of large bid clusters implies a lack of immediate support or accumulation activity. We also have to take into consideration, as Larry pointed out on Friday, that this is, of course, a slow, maybe one of the slowest weeks of the year. Why did Tesla's stock plummet? Whoops, I said that already. Here we go, the peer comparison. Among Tesla's related theme stocks, the movement was mixed. Audi rose 0.78, AXL, Beam, ATXG, and ACG all dropped by 2 to 4%. Anyway, so no real evidence there. The mixed performance suggests the move was not driven by broad sector rotation, but rather by a mix of individual investor sentiment and possibly algorithmic trading behavior, especially given the high volume and the lack of cluster support. And as I pointed out, this is weird, but I watch for these things, and that is Tesla was moving almost the same as NVIDIA and Bitcoin. So, I mean, for like 3 or 4 days, pretty much in lockstep. Hypothesis. Algorithmic sell pressure, the sharp intraday decline without clear support levels, failures and mixed peer movements may point to a large gap. Algorithmic strategies are hedge funds trimming positions ahead of the earnings or macroeconomic events. Short-term bearish momentum, the confirmed 𝐄𝐦𝐚𝐲 death cross supports a short-term bearish momentum, suggesting traders are rotating out of Tesla into more overbought names or into cash, especially in the absence of positive macroeconomic data. Well, what about, here's the tradable. What did the tradable have to say? Well, Tesla stock has defied expectations by remaining remarkably flat over the past 10 weeks, even as the company quietly advanced its most ambitious project, fully autonomous Robotaxis. While markets seemed indifferent to this revolutionary technology, some experienced traders believe Tesla's silence might be strategic, setting up conditions for an explosive price movement once the company reveals its hand. Tesla's Robotaxi launch represents a pivotal moment in transportation history, yet Tesla shares haven't budged. This disconnect puzzles many investors who expected immediate market recognition of the technology's potential. I guess that would have been me. Trader Elon Vester suggested Tesla's quiet approach is deliberate. The company appears to be prioritizing system reliability over publicity, collecting extensive safety data before making bold claims. There you go. Now, this is what we heard on Saturday morning from our engineer in the business, Phil Beisel. This methodical strategy protects Tesla from premature criticism while allowing engineers to perfect the technology away from public scrutiny. This is, again, what Phil Beisel said. So it's been 10 weeks since the Tesla Robotaxi service began, and the stock has been flat. 10 weeks of improvements in the unsupervised FSD software, but nothing. All right. Behind the scenes, Tesla has been strongly improving its full self-driving software and Robotaxi app functionality. The company is gathering crucial validation data, including safety metrics, response times, regulatory compliance information. The Robotaxi service area continues expanding, though Tesla hasn't announced specific coverage details. Many believe the company will stay quiet until its next shareholder meeting, maybe even, or major announcement event. Despite groundbreaking technological progress, it says here, the financial opportunity is enormous. Successful Robotaxi deployment could generate billions in recurring revenue, potentially matching or exceeding Tesla's traditional car sales. We definitely expect that. 3 critical questions will determine Tesla's stock trajectory. When will performance data be released? How quickly can FSD gain full regulatory approval? Can Tesla maintain its lead over Waymo and Cruise? Until these uncertainties resolve, Tesla may continue trading sideways. However, once Tesla demonstrates system reliability and shares meaningful progress metrics, analysts expect a significant price surge that can reward patient investors. This is Randy Kirk, by the way. You can hit the like button if you haven't already done that. You always have to remember to do that and then subscribe. That'd be wonderful. That'd be fantastic. And then notify, of course, that will help you to remember that there will be a full slate tomorrow. All the regular stuff coming tomorrow. Well, after the bell won't be after the bell because there won't be no bell, but there will be a show in the morning, and then there'll be a show in the afternoon. And that will be the regular, what we do usually on Sunday night, that will be on Monday night. And that's where we'll lay out all the different things that are going to be coming up the next week in terms of, next week we've got the labor reports and other things. I'll explain all those things and talk about what to expect next week. And by the way, a hint, we might have zero growth in jobs, or we might have negative growth in jobs. That could happen, and it won't be shocking, and it won't mean that the economy is falling to pieces. But there's already headlines that are setting us up for that. No, 0 to about 40 to 50,000 is expected now. I might be talking about that in a minute. I forget. The 𝐄𝐦𝐚𝐲 letter. Gold is replacing fiat currencies as the reserve currency. Gold's share of global international reserves rose 3 percentage points in Q1 of 2025 to 24%, the highest in 30 years. This marks the third consecutive annual increase. Meanwhile, the U.S. dollar's share declined by 2 percent points to 42%, but that's still 42%. But that's the lowest since the mid-90s. The euro share is about the same at about 15%. Interesting that the Europeans are not nearly as reliant on, they're using the dollar, I guess. Gold is now the world's second largest reserve asset, surpassing the euro in 2024. Gold is seeing historic levels of demand. We're seeing that. It's at all-time highs by a lot and continuing up. I have seen and heard, this is Randy talking now, not any particular article. I have seen and heard top financial journalists and journalists all over the place the last few days stating that if only Trump gets Lisa Cook, or if Trump gets Lisa Cook to step out of the way, he'll have the votes that he needs. This would be based on replacing her, and I forget the name of the other Fed governor who just recently quit. And then that would, if he replaces both of them and gets Senate approval, then he would have new friendly governors to go with the 2 that he has now, and 2 more. That'd be a total of 4 out of the 7 governors. So then he'd be in control, right? Wrong. And I've been saying it on this show all week, and yet I keep reading other people saying it wrong. So I'm like, okay, maybe I'm crazy. So I asked Grok, and Grok agrees with my understanding. The 5 presidents of the various regional Fed banks also are voting members. And these 5 members rotate. I think maybe every year I don't know what they change, when they change, but I didn't bother to look that up. But Trump will only have 4 out of 12. He'll still be down by 8. But however, this 2 dissenters the last time, that's the first time there's been more than 1 dissenter in 2 decades. So no, the Fed doesn't like to have dissenters. The Fed likes to hammer it out around the big table and get everybody to agree on the direction. They don't want any dissenters. They want to have 100% unanimity. If that's what they normally get, and they had 2 dissenters, that was huge. Well, there's not going to be a chance that they're going to make some kind of decision with 4 dissenters. So I think everybody agrees we're going to see the cut coming up, but I thought it was interesting. Half of the articles that I'm saying, so many articles in Wall Street, in Forbes, all these different places, all kinds of people, quality people that are saying, oh yeah, he'll have the majority. Then he'll be able to do what he wants. It'll no longer be an independent Fed. What's wrong with these people? And by the way, I've already talked about this before, but I'm going to say it again. I don't think the Fed should be so independent that it acts as a fourth estate to stop the president from getting his interest served in terms of the direction he wants to take the economy. It's not in the Constitution, as Larry said. It's not in the Constitution to have this group be that powerful. And I don't think they should be that powerful. So I do think that the president needs to be able to get his Fed something that's something like his Fed in there so that he can get his plans done. The Washington Post says a recurring theme. This is okay. Now, what I'm going to do here, I'm doing this. I wanted to read you this because I want you to take a look at moral equivalency at its best. This is like exactly what's happened to the Democrats. You don't see this as much on the Republican side. You do see it. You don't see it, but you see a ton on the Democrat side. And this is exactly what is destroying that party. This is the core that they don't have. There's no core. If you don't have fundamental beliefs, if you don't have a fundamental belief in the rule of law, then why bother? Why have kind of let's see, rule of law? Well, you'll see what I'm talking about here. So pay attention. Here we go. And then after that, I'm going to put the card up for that Brian Wang video from this morning. A recurring theme on this column, not my column, their column, perhaps the most unpopular theme, is that the optimal amount of fraud in the system is not zero. I've been thinking about that theme as the drama surrounding Lisa Cook has unfolded. Before you get mad, let me explain that I'm not talking about the ideal amount of fraud, which would always be, of course, zero. But cheaters abound in this vale of tears, and it's often cheaper to tolerate some small amount of grift than to make the maximum effort to stop all of it. That's why your employer doesn't take every possible step to ensure that you're not taking home office supplies, and why most retailers until recently left goods on open shelves instead of putting the razors and the Tide Pods in locked display cases. Yes, well, I'm a retail expert. I have written books on how to lay out a retail store. I've talked about the benefits and the detriments in terms of the fact that you're going to have a certain amount of theft. But you know what? Did you know that employee theft out the back door in retail is worse than shoplifting, at least except in San Francisco and Los Angeles? Anyway, similarly, banks don't want you to commit occupancy fraud, where you say you're going to live in a home to get a lower loan rate, even though it's actually a vacation or investment property. People are more likely to default on investments of lake cabins than their primary homes. And they're more likely to default on properties that are rented out than they are on their primary homes. But it would be more effort than it's worth to ensure that everyone who says they're going to live in their new home actually intends to do so. Well, technically, this is a kind of lie, is a federal felony. In practice, individuals are rarely prosecuted because that would take a lot of time that the bank and prosecutors could use more profitably doing something else. Well, it's also, as they point out, it's kind of difficult sometimes to figure out. And then maybe to a certain extent, you have to prove intent. I think that the intent thing is not that hard. Some people have said it is, but I'm not so sure. But what he's saying is true. Everybody, I don't care what business you're in, you're going to go like, I can't be bothered. That's too small. But then, to the extent that you let it get away, as we've seen in New York, we've seen in almost every big city in the United States, then all of a sudden you've got a huge mess on your hands. The other thing is that this is a fraud which impacts the entire system. So therefore, if you allow the fraud to go crazy, and then all of a sudden you have a difficult financial situation, you could have regional banks who are the primary lenders of these kinds of things. You have regional banks, you have Fannie and Freddie in serious trouble because of many more defaults on second homes and private property, commercial property than people were expecting. That brings us to Cook, he says, which the Trump administration is accusing of having committed, or at least creating the appearance of, occupancy fraud. The facts published so far raise some troubling questions. Well, of course, Lisa Cook has admitted that she signed it. She says it was a clerical error. Then she has a third property, more clerical errors, I guess. A public record search by Reuters appeared to confirm that on June 18th, Cook obtained the mortgage from a Michigan credit union for property in in Michigan. And then she said it would be her primary residence. Then 2 weeks later, she did the same thing in Atlanta and said it would be her primary residence. Well, two places can't be your primary residence at one time. Now, sometimes people buy a house they plan to live in, then something happens, they have to move, a job loss, a transfer, a health crisis. That's not fraud. It's life happening. But given that these two loans closed in such a short space of time, well, he says, I'm finding it really hard to tell a story where she thought she was going to be living in Michigan while applying for a mortgage on a property in Georgia or vice versa. I suppose it's possible that the banks knew about the other properties and didn't care. Well, that would be fraud on their part. That's what we had in 2008. We had banks that were looking the other way. That is maybe even worse than when we have a Fed governor that's not doing what she's supposed to do. All right? Having the banks not do what they're supposed to do. So she says, this article goes on to say, or perhaps she or her mortgage broker accidentally checked the wrong box on one of the loan applications, but that would be a surprising mistake for a tenured professor of economics, much less a member of the Federal Reserve's Board of Governors, to make. Yeah, in fact, I could make the argument right now that either it's fraud or she's an idiot, incapable of checking the right box on 3 mortgages, and that would make her not credible as a board member either. So get her out of there as governor. Anyway, assuming that she did engage in some chicanery, though how outraged should we, he says, how outraged should we be? Occupancy fraud is common enough, perhaps 2 to 3% of loans. That you might well know and even respect someone who's committed it. No, if I knew, I wouldn't respect them. Or some other kind of mortgage fraud, such as padding assets with gifts from family the family actually expects to be paid back. Yes, that is a different kind of mortgage fraud. And yes, that happens way more frequently. You can argue that a Fed governor has to be far above reproach. Yeah, I could make that argument. And in fact, four that I know of, Fed governors have left the post because they were not found guilty. They were just merely, people became aware of their chicanery and they went, I'm out of here. You can also argue that this is almost a victimless crime. It's not a victimless crime at all. And that the current investigation is a pretextual witch hunt that threatens the Fed's independence. I, for one, find the second argument pretty convincing. Oh, I see. Oh, okay. What would you say about the last 6 years with regard to Mr. Trump, where one prosecuting attorney says, I'm going to get him. I'm going to go after him until I find something. This is not somebody going after somebody until they find something. This was actually an outside person, a reporter, who found this information out and passed it along to the Department of Justice. It was not an operative within the Republican Party. That might suggest turning a blind eye, even if she did lie to her mortgage lender. What? Even the judge said on Friday, no, it doesn't matter. It has nothing to do with the intent of the Trump administration, the Department of Justice, or anybody else. Nothing to do with the intent. The judge said that. The lawyer for Cook said it had nothing to do with that. Nothing. And this guy is such a morally equivalent yo-yo that he thinks that this should have something to do with whether or not she leaves the Fed. The problem is, though, is it true? So I'm sorry. The problem is that though it is true that the optimal amount of fraud is not zero, the system can't afford to publicize that fact. We learned that lesson from the shoplifting debacle. Oh, yes. Well, that's certainly true. We don't want to let everybody know that it's okay to do fraud like we did in 2008 and have the entire system go completely upside down. Retailers adopted hands-off, blah, blah, blah. Who cares? Okay. I worry that the Trump administration has put us and Cook in a bind. Forgetting the Fed's independence is much, much more important to the health of the banking system. The Fed's independence is much, much more important to the health of the banking system than reducing a small amount of occupancy fraud to a slightly smaller amount. No, maintaining the relevance of the Fed, if you're allowing fraudsters to be on the Fed Board of Governors, would be way, way more important. And not only that, the argument that I would make is that right now you have 2 Republicans, 10 Democrats, and that the entire staff of the Fed is Democrat. So that doesn't sound to me like independence either. The president appears to be using governmental agencies. No, he does not. It didn't come. He didn't do his reporting very well. He didn't even ask Grok. This did not come as a result of the Federal Housing Authority or anybody else, federal financing agency. They didn't go, oh, let's see if we can find something on anybody on the Fed. No, it was an outside individual. Fed governor, this is a political gore. It's settling scores, replacing Fed governors he dislikes with someone more pliant. Bill Pulte, that agency's director, should not have abetted this. Well, no, he received the information from an outsider. Then it's up to him to go find out whether it's true or not. But now that he has, can we afford to say, well, occupancy fraud is really not a big deal? It happens all the time, and realistically, no one is ever punished? Well, because that's a good way to ensure occupancy fraud really does happen all the time, or at least more of the time, forcing banks to do whatever the banking equivalent is of putting the Target deodorant aisle on lockdown. No, I don't love that situation either. It's such moral equivalency. So unless Cook explains why this really wasn't occupancy fraud, we're left with 2 unpalatable choices. Letting a public official getting away with something the system can't afford to publicly condone. No, we can't afford to let the Fed governor get away with it. What a fool. Oh. The only way out of the quandrum is for Cook to tell us why it looks so much like occupancy fraud when it's no such thing. I sure hope that she does that, and soon. Well, she's already, maybe he wrote this before the court made the decision, or not made a decision, before everybody turned in their paperwork on Friday, before there was 2 hours of arguments, before the judge and the lawyer and everybody else agreed that the only thing that they could agree on was it doesn't matter what the Trump administration thought. It has nothing to do with it. This is his whole argument is nonsense. And also that Lisa Cook admits that she signed both of them, that it appears to be fraud, but it's not fraud because she screwed up. All right, I've already told you about the phenomenal video that you missed, probably because last time I checked, only 1,000 people had watched it. Ridiculous. There's the card right there for the Brian Wang video from this morning. You definitely want to go back and watch that. And then again, we will have another video tonight. Yes, we'll have one tonight. Oh yes, tonight, later tonight, we will have Cern Basher Part 2 from Thursday night. And it's always going to be amazing. And in fact, I know for a fact this one's amazing because it's already in the can. And I can tell you that you don't want to miss it. So that'll be probably about 6:45, something like that. In case you are interested or care, starting on Thursday, football night, I'm going to start doing it a little differently. I think the last one's going to be at 8:15 or 8 o'clock instead of 7:45. So it's kind of near or close to the end of the game. I might be doing that on Mondays and Thursday nights, something like that. And then try to do Nicholas Gibbs on Thursday and Larry Goldberg on Mondays. Try to do those at 3 California time so that it's plenty of time to watch it before the game starts. So that's what I'm going to try to do, something like that. And on Sundays, I got to figure that out because football season kills it. We're talking very big time. Why even do them? You guys aren't going to watch me instead of, Pittsburgh versus New England. I mean, forget it. All right. So that's all I got for you right now. It has been great talking to you.